Okay, well, this guy's a burnout. I had the insanity hat on. I made this crazy video the other day, and I thought I'd put it up on YouTube, but never put it up on YouTube. Doesn't matter now. Let's talk about January 16th of 2018, where I dumped my entire portfolio because we had that intraday sell-off. Let's recap. UVXY was going higher for the first time in 18 months, trending higher, pulling back and not selling off, trending higher, pulling back and not selling off, and we had an intraday blow off top. And I thought there it was. That might have been a short-term top. I was wrong. UVXY didn't sell off, but the market continued to rally. The next day, we made up the points that we lost on, I think it was January 16th, roughly, whatever, 13th, 16th. And then the following week, we had another day where we walked in and the Dow futures were up about 250. We wound up selling that off and ending up the day flat. And I was like, aha, another one. And the UVXY was trending higher, and we had the euphoria of the Bitcoin and the blockchain. So again, for you guys that are going to be trading for the next 8 to 10 years, and whether or not we have an unprecedented bull move that we were having, again, when we were buying Dow options and making 100 or 200% on these calls, and I was saying this can't last. We're not supposed to go up 1,000. We're not supposed to go up 150 points on average a day without a pullback. And I wasn't saying the market was going to pull back 3,000 points, okay? Once it got started, we had the levels, and I'm going to get to that, but just some sort of respectable pullback, but we weren't having it, so we had to keep playing the calls. Eventually, we're going to lose. Obviously, we rolled all the way to June 270s, which obviously are done. Or maybe not in this market. Maybe we could rally 3,000 points next week. Who knows? But went to cash, was loving it. All I had left was Alibaba and AMD options, which AMD was a winner, Alibaba was a loser. But it didn't matter because I sold the stock in the 200s. And yeah, I gave back some money on the options, but I didn't want to be devoid of any Alibaba in case they would have went ballistic into that report. So let's recap again. You had the UVXY trending higher. You had the dash for trash in full effect. You had euphoria going on in the Bitcoin. You had extreme bullishness, which I was fine with. But the oscillation, intraday sell-offs is your first warning sign that a market is starting to get weak. Now, I forgot what I was going to say because there was one more thing I wanted to mention. Oh, companies were selling off on good reports. We had that Lamb Research rolling over. We had, I forgot the other one, but there was a couple of stocks. Prior to this massive sell-off, we still had some companies reporting blowout earnings, and they weren't doing anything. So there you go. You had all that, and then you had the dry ships UVXY indicator yesterday. We got 1,000 points on the downside. Now, you guys know that I am a supporter of the VWAP Emperor. My buddy Zach, he came up with, he taught me about what to look for on VWAP and extended time frames on VWAP, and I want to give it up to Zach right now. Pretty much called the bottom without having to be here. Hi, Zach. The 9-month VWAP, 233.86. So we were short the diamonds today. And we're thinking, all right, here we go. Market's rolling over. We're getting hammered. Where can we cover? Where can we cover? My target price was 230, what was this? 236.12. Once we got to 236.12, the next logical place was the bottom of this range, which looked like around 232.60. But the 9-month VWAP was telling me 233.86 might be significant. Let it sink in for a second. I would show you the chart, and that's why I want to invite you again to our chat room. which is free. Again, my policy is come to the room, let me show you what I do, let me show you some of the VWAP range-bound candlestick pattern reversal strategies that I love, that worked phenomenally today. Let me show you what I do. Let me try to make you money before you ever fork over any cash. I don't think anybody does this on Wall Street. Come in, enjoy what I do, learn from me. Sometimes it backfires. Sometimes people spend a month with me. They suck out all the information. Ew, that sounds gross. They absorb all the information that they could possibly can from me in a month's time, and then they disappear. And they get a free education. I get nothing out of it except somewhere I know I helped somebody, and I'm going to be in heaven for it. And then we have the people that stick around and say, wow, this is where I want to be as a trader. I'm learning new things. I'm being taught how to profit. It's a fun environment. We're having a good time. So for me, it's not even a sale anymore. Come in, see what we do. If it fits your criteria, then stick around. We, again, it's mostly goes on live in the chat room. So if I'm doing a trade, you're going to see if it worked live. So again, you want to go to a website where they post results after the fact and fake testimonials with somebody's picture that's stock footage saying, I just made 18%. Or come in, see where we were. I mean, this was the most amazing day because we switched sides 5 times. So imagine you were getting text alerts from at your phone. Hey, we're going long the diamonds. Oh, no, we're going short. No, we're going long the By the time you get the text messages and get to the computer, chances are we were out of the trade. I was in the 240 calls on the diamonds earlier today and made a little bit of money. Luckily, at the time, they started to roll over. I got out of some of the profit and some flat. And then we rolled over. We started rolling over. So I bought the 237.50 puts on the diamonds. And again, made a little bit of money because it had to fall, 200 points for us to, get it going. But we were moving in 200-point increments. And then, just as I was thinking I might have made a mistake by getting out of the 237.50 puts, we're right back into trying to buy the 240 calls on that last leg up, which was the monster move, starting at around, for me, it was when we broke back above 238.95. And at that point, I didn't want to chase the diamond calls again, and that was my mistake on the day. Huge mistake. Tragic mistake, absolutely horrifying mistake by not buying those back. But the mistakes did not end there, and I'm not embarrassed to say this was a difficult day to trade, especially with any size, because one false step and you're not gonna be able to get out alive. So my bad idea today was a trade that inevitably worked, but I had so much size that I had to lighten up when it went against me, which was VRX. Apparently there was some news around that they had a FDA agreement or an approval. We were buying it at 17.35, 36, 37, 38, and then it rolled over and died on us, and we were forced to sell it for a pretty hefty loss. And once it never broke, back, it went back, so if you look at the chart, that was me. All those high prints around 1 o'clock this afternoon, that was me. 17.30, 1, 2, 3, 4, 5. Then I bought more at 34, 35. Then I bought more at 37, which was another bad one. And it all rolled over, and I started selling it at 25, 24, 23, and 20. And if you see in the chart, I was basically 3 cents away from it bouncing. But then when it broke back over the VWAP, we chased it again. But this time I wound up buying a third of the size that I had on the losing trade, and we bought some 17.50 calls and made a little bit of money back. But really what it comes down to, again, the same thing we've been talking about for 20 years now. Well, for me, I started doing education 2007, I guess. Same thing. if I'm an educator or a guru and I instruct my students or my mentees to buy VRX at 1735, okay? And I said, you might want to give yourself 20-cent cushion. But idiot schmuck fuckhead that I am, I only gave myself 12 cents cushion because I had so many shares. So my students and my mentees did well on the trade, yet I fucked it up because I got a little frightened with the amount of shares that I had. So am I right or am I wrong? Therein lies the dilemma that people want to see my P&L, right? I'm the only one that lost money on the trade because I got frightened and I decided to just dump the whole fucking thing. And, you know, then I got back in and made a little bit back. But some of the guys just got into the 1750 calls, bought the stock at 1735, and they gave themselves 20 cents cushion, 25-cent cushion, and they held the whole time all the way up to, you know, 1788, 1790, and they killed it on the trade. So I was wrong for what I did with my money, but the call was right. So am I right or am I wrong? In the big picture, I was wrong. But if I'm just an educator or a guru, I'm really right because these guys killed it today on that call. Same thing with the diamonds. Did okay on the first 240 call buy. Blah. Did all right with the 237.50 put buy. Blah, blah, blah. We're not talking about millions of dollars here, whatever. But then I said, you know what would be ironic is if we start to rally again, if we can get back over 238.50, maybe the diamonds make a push to 240. So let's buy the 240 calls again, which some of the guys did. I like to call this penny wise, pound foolish. I wanted them at 45. Most I wanted to pay was 65. So then I went on the bid at 60 to try to get them at 60, and then they went 85 bid. Next thing you know, I didn't want to pay 50 or 65. I certainly wasn't going to pay 85. For a moment, I said, you know what, I'll pay 75. I went 75 bid. Then they went $1.05 on the offer, and then it was over. Next thing you know, they're $3. So there, again, some of the guys just jumped in. They didn't care. They said, all right, I'll buy some 240 calls on the diamonds at 65. They didn't give a shit that I was trying to save myself. Again, I'm trying to buy 20 freaking calls, and that 10 cents, which is 200 bucks, you know, 10 cents on 20 contracts is 200 bucks. So again, that 200 bucks cost me 3,000. Who knows where I would have sold the contracts? I probably would have sold them into that move. But you understand, here's the dilemma. Here's the dilemma I've been having with education and you know, haters and skeptics and people that think that I'm a criminal or whatnot. If the call is good, you made money on it. That's all that really matters. If you're there in a chat room with a guy that's trying to give you advice. If the advice is sound, just, fantastic. And again, as an educator, it's really not for me. I want to show you what trades I like based on my high-low candlestick, range-bound, VWAP reversal strategy. It's all about the strategy, okay? I like showing the trades that I do because of the strategy, whether they work or not, to prove my point that the strategy does work. But there was one trade on the VRX that I fucked it up because I got scared out of it because that was my size. I lost, but everybody else made. If anything, I should be pissed at myself, which I am. And then we had the diamonds, which we made money on it up. We made money on the way down. But then the biggest move of the day came at the end of the day, and I nickeled and dimed myself out of a fantastic trade. So what does that mean? What does that mean? Am I not a good trader, not a bad trader? I very well could be the worst trader in the world. But if the advice that you're not even paying for, remember, it's a free month on me to come and hang out. So let's say you popped into the chat room today for the first time, and you said, and you heard me saying, get into the 240 calls right now, 45 cents. And you win. You hit the button and you got them done at 50 cents. They went to $2, and you had 20 contracts, and you turn $1,000 into $4 grand at the end of the day. I'm pretty sure you at home don't give a shit that I was such a penny-wise, pound-foolish schmucko that I didn't just hit buy on the offer. I tried to save myself $200 by trying to get done on the bid. Do you care? I don't think you should. I don't think you would. So at this point, if you're looking at my P&L to judge me, I blow today. But we had about 56 people in the room today. I know single-handedly, one guy had his best day of his life. One guy had the day that saved his whole week. I had a few guys that were in the VRXs. I had a few guys that were in the diamonds. I'm pretty sure they don't care that I didn't do well today, because they did. And that's my point. Come and learn what I do. It's not about my P&L. And here's another one. Alibaba, late in the day, right? Same exact trade. I was like, oh boy, Alibaba just double bottomed at the 1 minute. If it gets back over 174.50, you might have a nice rally into the close. Was announced. We were talking about it at 174.50 to maybe get to 175, possibly a 176 close. I didn't do the trade. I know one guy that did. He said thanks. I said sure. I didn't do the trade. He said thanks. So what does that mean? Am I a good trader or a bad trader? Did I do my job according to him, who's paying to be in the room? I did a fantastic job because he bought Alibaba at 174.57 and blew it out at 176, just like I said I was going to do. I didn't do it. What does that mean? Am I a good trader, a bad teacher, a good teacher? I'm just a schmuck because I should probably take all my trade ideas. But again, the question remains, what are you paying for if you eventually do pay? Are you paying for education or stock picks? If you're paying for stock picks, listen, then you're only as good as your last pick. So let's talk about that. I have a pick service, right? Got a few people involved. I send them some ideas, okay? And I think we've had this conversation too, and I just want to leave you off on this. I could be the greatest stock picker in the world. Imagine I send you 4 picks a week, and 3 of them work every week, okay? But you're the unluckiest guy in the world, and you pick. So every week on Monday, I send you 4 ideas that I think are going to be good for the week, or whatever, just to generalize it. You're getting your picks on Monday. They're good for I'm looking at Monday morning stuff to do. Like I said, I give you 4 every week or 4 every 2 weeks. 3 out of 4 work for 6 months in a row. If you're taking the picks, the idea is to take them all because they're all equally sound, equally good ideas, but you decide to only take the idea that you like out of those 4 ideas. So for instance, we were loving VRX on the dip, we were loving Alibaba, and we were loving Snap, but we also liked the mark for a moment there. So if you're the unlucky guy that only bought the mark because you read about it on Yahoo Finance and it was cheaper than the other ones, you said, oh, I'll just go with the mark. And that stock got lit up, my pick service sucks. But in theory, it didn't, because if you bought the other 3, it wiped away the mark debacle and then some. So if you had picked all 4, which is what you're supposed to do, so therein lies the problem again with a pick service. With any of these guru services, that's not what I'm trying to do. What I'm trying to do is show you the trades I'm doing, whether it be 100 shares, 1 share, or 7,000 VRX shares. Let me show you the trades that work. And obviously, if you got $2 million account, buying 5,000 shares of VRX shouldn't be a sweat for you. If you're trading with $5,000 in an account, but you bought 400 shares of VRX and it went up 40 cents and you made your $200, that's a fantastic trade to you. It's all relative, but the trade remains the same, and why it was a good setup and where your entry was and where your risk and your reward were. That's all I'm trying to do. So let's go talk about this market for a second. Same thing as always. It's a trading market. There's really no reason. I think I told you this story before. I'll say it again. Investing, you like a company, you want the fundamentals to, you like what they do. Let's use AMD again as an example. AMD, you're in 11, right? You bought the stock at 11. 18 months later, the stock's at 20. That's a fantastic investment. 9 points on an $11 stock in 18 months. You're the best. You're Warren Buffett. You're the shit. Nobody could fuck with you. But you just waited 18 months to make 9 points. Collectively today, we made about 7 points. Yesterday, we made collectively about 4 points. The day before that, we made collectively 2 points. You see my point? It's all about making money right now. There's no reason to be an owner or a holder of anything when you have this much intraday action. So what I'm saying right now is, do I still think Alibaba's going to 250 in the next 18 months to 2 years? I do. But now I don't care enough to own it. Because if it dips again on Monday and holds that support, I'll buy it there. And if it goes up 2 or 3 points, I'll sell it there. I'm not going to be completely batshit insane bullish again until we start breaking out again. I'm not buying the dips. I'm not forming a portfolio. I don't own stocks. I don't want to own stocks right now. Volatility is back. When volatility crashes again, we'll probably start to grind up again. But right now, cash is king. That means cash is king, so you're liquid enough to trade whatever is presented to you on the day. Trade the day, live for the day, enjoy the day. Am I mad that I didn't own Twitter? Sure. But you know what? Twitter sold off 5 points yesterday. We made some money on the way down. Today, Twitter dipped under 30. We made money on the short again, albeit very short-lived and a very little amount of money. Could have been a disaster. But then we went long to Twitter. Am I mad that I sold it before the numbers came out? Yeah. But I don't want to own stocks right now. I don't see the point. When that time comes, you'll be the first to know. But right now, day trading, maybe sprinkle in a couple of swing trades. But right now, why would you swing trade? Because you have no advantage at all. No way to tell what's going to happen Monday. So let's get to Monday. What's going to happen? Now that we rallied off the 9-month VWAP, that very well, I know I'm going to be ridiculed for this one. We might have seen the lows for the year. Oh, you hear what I'm saying? I'm a trader. We might have seen the lows for the day, the year, 233.76, right? Does that mean if the market gaps up tomorrow and rolls over, I won't be buying the 240 puts on the diamonds? No, that's exactly what I'll be doing. Whichever way the market gaps up lately has been a fade. We gap up, we give back. We gap down, we go up. Then it decides where it wants to go midday. We have a sell-off. Sell-off gets bought. We rally. We're having 4 or 5 different intraday swings now that proves that there's no reason. You've got stocks that moved in a what am I trying to say there? We've had stocks that have moved in the last 2 weeks in a 1-year range in just 10 days. What's the point of owning? What's the point of holding? There is no point. Don't do it. Just try not to get caught on the other side. Use your levels. Let me show you how to build the ranges so you know where to get in, get out, and take losses or take profits. I will show you. I will show you these things. Just stop on in. Stop on by. And don't do it for one afternoon. I had a guy come in, and we still get these guys. They come in on a Thursday afternoon at 2:15 thinking I'm going to find them some 300% gain on some options play. It's not how it works. The trades come to us when they come to us. When we see a reversal, obviously there was 3,000 of them to choose from over the last couple of weeks. Come do it with us live. And again, what if I never trade ever again? Does that make me any less skilled at finding ideas and teaching people about range-bound candlestick pattern recognition and, sprinkle in 20 years of sentiment knowledge and learning about imbalances and how to gauge whether or not options are overpriced or underpriced. None of it matters whether or not I trade or not. It all matters if whether or not I help you. So come to the room, spend a month with me, and I'm pretty damn sure I could help everybody. And that's where I'm at right now. I'm feeling lovely. I'm in 100% cash. I got really nothing to worry about except some stocks I've owned for 22 years, which is, I'm not going to go through the list of stuff that I still own, the family still owns. But one of our stocks was up $1.65 today, so that means a lot. I won't tell you what stock it is. I don't want anybody looking at it. Anyway, that's it. So have a good weekend. We gapped down on Monday. We might be testing today's lows. If today's lows get breached, we're in big trouble because it was a 9-month support level that we got to today. And we bounced. So now, again, today, the reason we were shorting at the beginning of the day was that when the relief rally becomes a sell-off, it becomes a panic sell because everyone is so excited to see the market hanging in there. And then when it doesn't hang in there, the sell buttons start getting pressed, the algos start ripping. And next thing you know, we got the little bit of a capitulation there down to the 9-month low. We bounced. The bounce becomes a squeeze. The squeeze becomes a rally. The rally becomes more of a squeeze. Next thing you know, we rip, rip, rip. We give some of it back and we close. So it was an extraordinary day, to say the least. I wish I was, again, I fucked up that VRX trade and I didn't buy back the diamond calls. And that was my day. I mean, my day was one missed opportunity and one bad trade really just cost my whole day. But it's a day. I'll stew about it over the weekend because it's enormous, the amount of money I left on the table. We're not talking about, oh, I left $120 on the table. We're talking about, 5, 10 grand, and it sucks. It really does. But it's just one day. I still feel great about selling my diamonds at 260 and 262. Got out of the Alibaba in the 198, 200 area. Twitter sucks, but I sold the VRX at the high print of its move in the 23, 24 area. So take the good, you take the bad, and there you have it, the facts of life. If you spent this time with me in a 27-minute video, appreciate it. Email me, Kennyglick@AOL.com, KENNYGLICK at AOL.com. I'll send you a link. Send me your phone number. I like to talk to anybody that comes into the room. We got a nice group of 50 people in there now, growing every day, and I appreciate the new guys that just signed up. I'll see you on Monday. Have a good weekend.